Broadcom making this $44.50 per share in cash bid for CA Technologies. Got a lot of analysts just kind of shrugging, going, what are they doing here? The reason is, of course, Broadcom is a chip company, all kinds of chips. They just made this unsuccessful bid for Qualcomm. That made a lot of sense to a lot of people, aside from Qualcomm and the US government, trying to become this mega chip player. But now, CA, very different. Here is a player where more than half of its revenue in the last fiscal year was in the mainframe business. The lion's share of its profit also in the mainframe business. It's been reinventing itself for the cloud era, trying to take this mission-critical enterprise software play and help customers migrate from mainframes to the cloud with the same level, arguably, of security, of accuracy, insight into their data. They've been pushing this hybrid cloud idea. So, what is Broadcom really up to here? Well, a couple of possibilities. Maybe Broadcom is trying to recreate that big box enterprise tech giant like HP and IBM and Dell were trying to do 15 years ago. Or maybe it's buying CA for the cash flow to fund other acquisitions. You take a look at what CA reported as free cash flow last year. It was around $1.2 billion. We know that Broadcom has been very acquisitive. It could be that they really want this for healthy cash flow so that they can go on and do other things. They will sell off pieces of this that they don't necessarily want. We don't know because they really haven't done a conference call to explain this, but lots of ears to the ground in this, trying to figure out exactly what Hock Tan is up to. CA had stabilized the mainframe business. They were just saying that it's no longer a negative, no longer much of a headwind to them. I guess if you're a buyer with an eye like private equity, that looks like cash flow. That looks like a good way to fund future acquisitions and expansion, and Broadcom has certainly been all about that.
Crazy question for you. The timing of this deal and the fact that they do seem to be such different businesses, and there's a lot of head scratching on Wall Street around this today. How much do you think that is tied to what we saw in terms of the results of the AT&T Time Warner decision from the court?
Well, I think it's totally different. I mean, I think there are similar dynamics at play, perhaps in enterprise software, as what we're seeing in media, in distribution. But I think what's happening in enterprise software is a lot of players are trying to get positioned for this Internet of Things, for the idea that there are going to be sensors everywhere. You're going to need to vertically integrate a lot of processes. If you're Broadcom, you're probably looking at high-value customers, like governments, like airlines, like financial institutions. Those are the very types of customers that CA also has. So the customer list is valuable, plus the cash flow is valuable. Everything else can maybe sort itself out.
Yeah. We'll watch that. 18-month low for Broadcom. That's the worst price action ever in its history.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.